Hi, this is Michael Rony Mullick, and you're watching the post market show. Today is the 3rd of June, so Friday, so first weekend in the month of June, and so markets have been very volatile today. It opened with a gap up because the US market ended well in the green yesterday, but then the positiveness did not continue. Market tested a high of 18 almost 16,800 in Nifty and 36,000 in Bank Nifty, and those were key levels we have been watching out for many days, and then the market sold off continuously from there. Bank Nifty made a swing of almost 850 points today after consolidating for just 200 points in the previous day. So Bank Nifty is showing its colors again in the markets, and so it was a continuous downtrending day for both the indices. And Reliance is the only stock which saved the day. Actually, otherwise the markets would have fell even more. Reliance and IT both contributed significantly to the Nifty's downfall, and it on a close to close basis is just down just point by 43 points. So this is the markets, which is very volatile, trading in huge swings between 16,400 and 16,800, but on a broader sense it is not going anywhere, so it is still consolidating in this range. So it has to break out or break down from these levels so that the market can take a trend. So this is the markets today, and we talked about an important data which is going to be announced. So the US unemployment data has also been announced, so we will be looking all those in today's show. So let's start with the analysis for Nifty. So Nifty, if you can see this chart, this is a daily chart in Nifty. It is on a uptrend. We can see in the trend line, but it is very volatile, and it is testing the downside and the upside of this range, and hopefully we can see some direction soon in the markets once it breaks out or break down. So you can see Nifty opened with a huge gap up of almost 150 points, then continuous selling pressure in Nifty. It brought the markets down, and at one point of time it braked yesterday's closing as well, ending at 16,583, ending at the lowest point of the day is what we have seen. So yesterday the markets closed at the highest point of the day, today the markets closed in the lowest point of the day. Talking about Bank Nifty, a similar picture, but even worse, because Bank Nifty touched a high of almost 36,000, and from there was a continuous selling. It's from high to low, it's made a 850 point move, and then towards the end ended slightly in the slightly tried to recover and ended at 35,296, close to 35,300. So these important levels we have been tracking for many days. So the markets respected both the levels, tested the upper range as well as the lower range as well in a single day. That is the kind of volatility we are seeing in Bank Nifty, and it is nothing new. So talking about how important the levels are, 16,800 and 36,000 in Bank Nifty. So you can see that 200-day moving average, which is grossly considered as the main indicator to indicate bullishness and bearishness. So we see 200-day moving average is around 36,000 in Bank Nifty. The market tested that level and it came down. In Nifty as well, the markets it's around 16,800 level is the 200-day moving average. Again, market touched that and it is falling down from there. So that is again the levels are important because of 200-day moving average is there, and as well as the important psychological resistance level is there in both the indices. Talking about other things in the market, we have the mid caps down today 1.6%, the small caps down by almost 0.8%. Talking about sectoral indices, all the sectors ended in the red, just barring the IT index. So IT index actually did not end in the red today. It ended slightly positive, 0.3% up, but other sectors are all down, majorly led by Nifty Auto. Nifty Auto is down by 1.8%. So after we saw a huge run up in the automobile stocks, we are seeing some kind of profit booking today, and this sector has the worst performance today. Other things like Nifty PSU banks are down hugely today. Nifty Media is down almost 1.52%. Nifty Metal Index is also down by 1.2% today. Talking about some stocks in action, we saw Reliance. It was very strong. If you look at Reliance at the high point of the day, it was close to just 1% from its all-time high. The all-time high is around 2850. the markets touched a high of 28.17 today. So Reliance saved the day, and we saw a huge sell-off in the cement stocks. Ultrasec Cement down by 5.5%, Sri Cement down by 4.6%. Ramco Cement, again a smaller cement industry, it is down by almost 10% today. Grasim also down by 6.5%. So PSU Bank, I told you PSU banks are weak, so SBI has contributed negatively by 1.14% down, SBI. And other things, we talked about Reliance. M&M, which was trading at an all-time high, it has shown again a huge red candle today, 1.5% down. So this should not continue, otherwise the market can get back inside the range. So the momentum it was gaining, it will be lost. Talking about other banks, the major banks fell today. HDFC Bank down 0.5%, ICICI Bank down 0.7%, Kotak is almost flat, 0.05% in the green. So this is how the stocks are traded. And also Raymond, we talked about Raymond in yesterday's video. It had shot up 20%, and now since the market sentiments are bearish, we have seen a major profit booking. The stock fell by 10% today, hitting a lower circuit. So this is Raymond for you. Talking about the index movers of the day, we see Reliance contributing almost 43 points to Nifty's today. To Nifty, Infosys, L&T, TCS. So these were the top gainers today in the market. And talking about losers, I told you cement industry and banking, both of them underperformed, and they are the major shares which are responsible for the market falling so much. So this is a quick roundup of what happened in the markets. And before we get into the economic data, let me discuss another important issue which happened in the market, and it has been doing rounds in social media and news platforms as well, is about yesterday's expiry. Yesterday, 2nd of June, was the first expiry of the June series, and there towards 237 to be exact, we saw fat finger trade. Now fat finger trade means when a person is placing an order, sometimes by mistake, instead of putting one figure, by mistake they put some other figure, and it causes a huge error in the system and causes huge losses. That's a fat finger trade. And what is the amount, you ask? So Nifty was trading around 16,500. It was second of on expiry day. So around the end, it was trading at around 15 paisa. It was trading around it was 16,500, and the order was placed at say 14,500. That is 2,000 points in the money call option, which should be trading at 2,000 to 2,100 rupees. The order was placed at just 15 paisa, and that causes a huge, and it was not a small order, it was an order of 12,50,000 quantities of Nifty, which translates to 25,000 lots of Nifty. So definitely it's not done by some small individual. It is obviously an institution who is behind this, and the amount of loss is calculated to be around to the tune of 200 crore rupee loss in a matter of a few seconds. So that is what happened. And people are speculating. There's a lot of speculations going on. Was it intentional? Was it mistake? But we are not going into the speculation. So these kind of things are called a fat finger trade, where some erratic price behavior happens for a few seconds, and so that is what happened yesterday. Now to show you the effect in the chart, so let me pull up the chart of yesterday's expiry. So the option chart of you can see this is 14,500 call option. It should be trading at around 2,000 rupees. It ended at around 2,100 rupees is what we can see. And if you see the low of the candle, this is a 1 minute candle I'm showing you. So at around 14:37, that is 2:37 p.m. in the afternoon, the stock hit a low of 15 paisa almost. So that is the low which I told you, and you can see the volume candles as well. So almost 1.2 million or 12,50,000 shares were traded at just 15 paisa, and the next moment, you can see the next minute the market shot up to 2,100. So this is again a classic example of a fat finger trade, and I thought I should be telling you this. So for your information, please, whenever you are putting your orders, please be very, very careful on what you are placing, the numbers, and also instead of call, don't write put, don't sell put, and all those things. People are expecting that this is instead of putting an order for 16,500 strike price, the person by mistake or an algo, they made a mistake and placed an order for 14,500. So that's what people are expecting. So this was again a major thing which I wanted to discuss, and I've told you that. Now coming to the FII DII buying and selling activities of the day, which we always see. FIIs have continued to sell today again, back selling hugely. 3,770 crores selling from FIIs, and DIIs have bought lesser than that. 23,060 is the buying amount from the domestic institutional investors. Now the economic calendar, I told you the employment rate of the month of May has come in US. Expectation was 3.5, it came at 3.6, so 0.1 percentage up. So this is the data for the month of May, and the markets did not take this positively, and we are seeing some kind of profit booking in the markets. The US markets are down, Asian markets are down, European markets are down currently. So that is the kind of markets at present. So let us see the chart of the US market, and you can see the kind of bearishness in the market. S&P 500, it opened with a gap down, and let me open up the 5-minute chart for you. Yes, S&P 500 opened with a gap down. It continued to sell off. Then we saw a slight recovery towards around 10:30 p.m. and then again it sold off for a second time. As Nasdaq looking even more weak, 2.6% it is down. It opened with a gap down, tried to recover a bit, but then again sold off. Dow Jones, same thing, opened with a gap down. It recovered almost entire fall, but then again there was a second round of selling, and it is currently still down by almost 0.9% in the red. You can see a similar thing happening. The Indian market, we saw it is continuously sold off. The DAX German index opened with a gap up, sold off. The UK market opened with a gap up, and then it also sold off. So UK markets, it also sold off. And the French market also opened with a gap up, and also it sold off as well. So this is the same thing we are seeing in the European markets and Indian markets as well. And currently the US markets are also trading in the red, and deep in the red, especially Nasdaq. So the VIX in the US is up again at 1.7% up, is at 25. India VIX has slightly down below 20. It's 19.97 is the current India VIX it's trading. Talking about SGX Nifty, let us see. SGX Nifty is has broken 16,500. It is trading almost 100-point gap down. 16,483 is where SGX Nifty is trading, and it made a low of 16,469. So again, things are not looking that good in the SGX Nifty as well. So again, we have 2 more hours for the US markets to trade. Let's see where it ends, and we will be seeing the levels based on the closing price of US markets. Talking about other things, we always check the dollar index. The dollar index is around 102. So we are seeing the dollar index move between 101 and 102 for many days, and same thing continues today. USD INR has weakened by 30 paisa today, and it is trading at 77.6, which is again a bad sign for the markets. And crude oil also is shooting up, which is again a negative sign. It's $118. Yesterday the low was $111. Now it is trading at almost $118. That is not good symbol as well. So this is the crude oil. Now talking about the open interest in Nifty and Bank Nifty. Nifty, we saw that it was the PCR put call ratio was at 1, but now we see that huge amounts of call were written as the markets were falling, and this indicates the markets are slightly bearish, and that is exactly what we have seen in the markets today as well. This is for the Thursday's expiry, so we have to wait till Thursday, at least Monday, to see what kind of trend the market is taking. Bank Nifty even more bearish. We see PCR is at just 0.56, and the markets are hugely down. Huge amounts of call have been written today in the markets, and even 35,500 also has the second highest open interest among call options, where the markets closed actually. So this is the kind of bearishness we see in the Bank Nifty as well. So with all the datas where US markets end, so with all those datas, and also next week we have the Monetary Policy Committee meeting of India on Wednesday. So probably we're expecting rate hikes to control the inflation in the economy. So those things and more economic data, important levels for the next week, all of those will be discussed on Sunday's week ahead program at Sunday at 11:15 p.m. at night. So let's join there and discuss important things for the next week. So for now, this is all for the post market report or post market show, and hope you have a happy weekend. See you on Sunday evening. So thank you for watching.